Welcome to Your Inbox Last Night, the show that cuts through the noise and gives you the fintech and banking stories that actually matter. If you work in finance, payments, crypto, or even just use a credit card, what happens in this industry impacts you. We dig through the top newsletters, breaking news, and insider reports so you can get to the stuff you need quickly and easily. I'm Michelle Tivy, and today is February 25th, 2025. Today we're covering a $50 billion power move by JPMorgan, Mastercard's latest courtroom battle, and Mr. X is here with some crucial insider info on government payments and how one bank is Zelle crazy. Let's get into it. Now, starting as we usually do, here's the headlines from popular industry news sources. According to TechCrunch, OpenAI is considering a major break from Microsoft, shifting its cloud infrastructure over to SoftBank. That's pretty huge. If that happens, it will restructure AI market dynamics, reducing OpenAI's reliance on US tech giants while strengthening SoftBank's foothold in artificial intelligence. Wait, what happened to making America great? Never mind. Meanwhile, this is interesting. Payments Dive reports that Global Payments is selling off its issuer business in a move to streamline operations. The company is shifting focus away from direct card issuing to concentrate on core payment processing. In another Payments Dive exclusive, Block is expanding Afterpay into Cash App debit cards. The move allows Cash App users to access buy now, pay later options directly from their bank-linked debit cards. You'll recall the story we did just yesterday announcing Affirm's debit card deal with PayPal too. And over at Banking Dive, Morgan Stanley is facing DEI backlash and scrutiny over pay equity. As more firms scale back corporate diversity initiatives, financial institutions are getting pressure from both sides. Investors demanding results, and politicians looking to dismantle DEI programs. Turning now to crypto and Web3. According to the Defiant, SafeWallet has paused operations following a Bybit security breach. The company is investigating whether the breach impacted user funds and wallet security protocols. Another reminder that in crypto, one day you're up, the next day you can't access your wallet. In enforcement news, the Defiant also reports that the SEC is launching a dedicated cyber unit to crack down on blockchain fraud. The agency says it is ramping up its oversight of crypto exchanges, DeFi platforms, and smart contracts, which is what the industry is asking for. Whether or not this is signaling a more aggressive approach to digital asset regulation under the current administration remains to be seen. And surprise, surprise, Digital Transactions reports that Coinbase may be off the hook as the SEC withdraws its case. The SEC held the position that all cryptocurrencies besides Bitcoin and Ethereum and maybe XRP were speculative, unregulated securities that endangered the public due to their volatility and frequent occurrence of pump and dump schemes. While no official explanation has been given, it seems the agency is reevaluating its legal approach with new leadership at the helm. Now turning to our favorite substacks. Over in long-form fintech analysis, Fair Observer is covering the crisis at Evolve Bank and what it means for fintech banking relationships. The piece explores whether small fintech-friendly banks are under too much strain and whether they can sustain their partnerships with major financial technology firms. Meanwhile, Fintech Magazine reports that Visa is making a big push for digital identity in payments. The company's latest report outlines how biometric authentication, AI-driven verification, and blockchain tech could shape the future of secure transactions. Keeping on top of the litigation between states and the federal government impacting payments, Payments Dive reports that 23 attorneys general and the CFPB are fighting Elon Musk's public interest case in Baltimore, proving that payments news is everywhere. NPR is reporting that actions are happening to reshape how banks operate in the U.S., reminding us that these shifts will have potential long-term effects on financial institutions and customers. Under the theory that journalism is everywhere, Banking Dive is reporting on an email leak from the federal government revealing the mass firings of financial regulators we wouldn't otherwise know about. Losing regulators en masse at the FDIC and the Office of Controller of the Currency at this moment? Conflicts of interest, anyone? No, just me. Okay, moving on. Meanwhile, across the pond, UK banking regulators just hit every bank known to man. Well, maybe not, but a lot of banks. Citi, HSBC, Morgan Stanley, and RBC were all fined by the watchdog over their trading practices. $50 billion. That's how much Bloomberg says JPMorgan Chase is pouring into direct lending. That will give the bank even more influence in private credit markets. For all our strategists out there, Digital Transactions explains how Bank of America is leveraging Zelle as the backbone of its digital transformation. They also report that Clover Payment Systems may be accepting crypto payments soon. Coming to a bodega near you? Time for the AI in Fintech report. According to CC, JPMorgan is imitating Tencent's PalmPay technology for biometric payments, indicating the sincerest form of flattery. Just kidding. The bank is reportedly exploring palm recognition as an authentication method, potentially bringing biometric payments to mainstream U.S. banking. And in a major legal decision, Reuters reports that a UK court has approved Mastercard's settlement despite heavy opposition. The ruling could set a precedent for how class action settlements in UK financial services get handled going forward. And now it's time for the always informative, sometimes scandalous whispers from Mr. X.
Well, is the crisis at the U.S. Department of the Treasury over, or have we just forgotten about it? Yeah, that's the point. How the heck do we know? Now listen here, if you think the government is going to give you a heads up before the money stops flowing, well, bless your heart. According to notes on the Crises, there are warning signs, but they sure ain't coming from Treasury press releases. The resale signals, bank liquidity reports, internal payment settlement data, and a whole lot of sudden technical difficulties. See, banks always know first when something's off because they see the payment stop before you do. And when it happens, they don't announce it. They prepare for it. That means capital buffers get shifted, routine audits start locking up accounts, and suddenly your direct deposit is delayed due to unspecified system maintenance. So, is a shutdown coming? Let's just say, if the banks are worried, maybe you should be too. All the more reason why you should be listening right here every day, folks. Well. According to Digital Transactions, Zelle has moved from a quick way to split dinner to something way more powerful. See, Bank of America is not just using Zelle as a nice to have. No, sir. They're turning it into an infrastructure play. Merchants, bill payments, even payroll services, it's all being quietly rolled into Zelle's back end. And why does that matter? Because this is about control. The more transactions that flow through Zelle, the more data the banks own, and the less they rely on card networks. But here's the kicker. Zelle doesn't charge merchant fees like Visa and Mastercard do, at least not yet. So if the big banks decide to undercut the card networks, we could be watching more of a real shift in payments away from cards, which, as our regular listeners know, Michelle and Payometry think is a mistake for merchants. All right, darlings, that's it for me today. Don't forget to email labs@payometry.io or hit up our signal if you've got more tips for me. Until tomorrow, sugar, I'm Mr. X.
Well, that's what we found in your inbox last night. I'm Michelle Tivy. If you found this useful, tell a friend to subscribe so you never miss the latest on fintech, crypto, banking, and policy. We'll be back tomorrow with more. Please don't forget to like, comment, all the things. Stay sharp, follow the money, and don't believe everything they tell you.